The VA loan is truly the best loan out there. If you have access to a VA loan, there is a host of benefits that we're going to talk about today. So this is 10 VA loan benefits. Number 1, 0% down. The VA loan allows you to put nothing down, which is the only loan that really allows you to do this without some sort of down payment assistance. So that is an awesome benefit. No cash out of pocket except for any closing costs. Number 2, 0 down. Does not mean 0 cash. So just because you're putting nothing down doesn't mean that there's 0 cash. However, the VA loan allows us to get seller concessions to pay for all of the closing costs. And I've had many clients that end up getting to the closing table, getting a check back, or even taking those seller concessions and paying off credit card debt. So they are very flexible when it comes to how we can use those concessions. We can also buy the rate down. Number 3, the funding fee. The funding fee is on all VA loans unless you have a disability rating of 10% or greater, then you are exempt. But if you're not exempt, then you're going to have a funding fee. It's going to vary based on a number of different factors. For example, is it your first time using a VA loan or is it a subsequent use? Are you putting 0 down? Are you putting 5% down? Or are you putting 10% down? Are you refinancing just regular refi, or are you doing a VA IRRRL? All of those things will change the amount that the VA funding fee is, and it'll vary between 0.5% all the way up to 3.3% of the loan amount. Now, it doesn't have to be paid out of pocket. It's rolled into the loan amount, but that funding fee is there, and it's there to guarantee the loan. That money goes into a pool so that if there's ever any defaults, that money is there to help the lenders lose less, and because you're helping the lenders lose less, they have less risk, which means lower rates. So number 4 is appraisals. The appraisals can be more strict, but the appraisals also allow you to kind of fight back, if you will, if the appraised value comes in lower. They know that a lot of times these service members are moving across the country, they're PCSing to a new place, and they got a lot hinging on buying this home. And so if they're buying this home and the appraised value comes in lower, they have the option to basically say, we're going to get a Tidewater notice is what it's called. So we as the lender get a Tidewater notice. It says, hey, this appraisal is coming in lower. We don't know how much lower yet, but it is coming in lower. Here is your opportunity to provide additional comps and reasons for why you think the appraisal is coming in higher. We can choose not to do that and say, hey, we'll take the lower appraisal. But sometimes there's clients that are really into that home, or really like they're kind of between a rock and a hard place and they need that loan to close. So then they're going to say, all right, here's the comps, here's the reason why. And so the VA appraisal, even though it's more strict, it also has more measures in place to fight those low appraisals if it comes up. Number 5, the VA IRRRL. So any loan you can refinance and lower the interest rate, but the VA loan is the easiest loan to lower that rate on. The VA loan has something called the VA IRRRL, which stands for Interest Rate Reduction Refinance Loan, IRRRL, and that allows us to drop the interest rate on a loan. There's a couple of rules in place, but generally we need to drop that rate by about 0.5%, or take you from an ARM to a fixed rate loan, a couple other different things. We need to make sure that you're saving enough money, so you have to recoup a certain number of those closing costs within 36 months. But it's super easy because we don't have to do anything with income. So if somebody, let's say somebody has this home and they lost their job, well, usually with a regular loan, if you lost your job, we can't prove you can make that payment, and so we can't do it. But with the VA, they go, well, yeah, you might have lost your job, but you're still saving money by going into this lower rate loan, so we'll allow that. So we don't care about income at all. We don't even have to verify income. No appraisal. Appraisal doesn't matter. We're just lowering the value. So again, if you have, let's say, home improvements going on, other loans you can't do it, but with this one, we can just lower that rate. So the VA IRRRL is great there. And then the closing costs are less. So we've got certain closing costs, like the VA funding fee, as well as like the title fees. They will generally be less, and it doesn't require any cash out of pocket. So the VA IRRRL is awesome, and you don't even have to be living in the house. So you could have already turned it into a rental property. It's now an investment property, but we can still lower that rate, still redo that VA loan. So it's an awesome, awesome tool in the tool belt. Number 6 you can use your VA loan more than once. This is a super common misconception. I think luckily this myth has been busted now by most folks, but you can use your VA loan again and again. And you can have multiple VA loans at the same time. You can have 2, 3, 4. It really just depends on how much entitlement you have. Hit us up. We'll help you figure out how to calculate that for your clients. But the important thing to know is that just because somebody has one VA loan does not mean that they can't get a second. And it also doesn't mean that they have to save their VA loan. I've heard so many people say, well, I don't want to use my VA loan because I'm saving it for when I can use it at an opportune time. Forget about that. If you have the option to use a VA loan, use it. It's the best loan ever. Number 7, we talked about this, lower interest rates for VA loans. Because of those guarantees, you got lower rates across the board. Generally speaking, if you're at, say, 7% for a conventional loan, you're going to be at probably 5.99 to 6.25 for a VA loan. Overall, they are lower rates because they're lower risk. Number 8, no PMI. There is no PMI with a VA loan because of that guarantee. Because of that VA guarantee, they don't have to do PMI. So not only do you have lower rates, but you also have no PMI, which makes that monthly payment super attractive there. And as an added bonus, it allows for a higher DTI. So if you are having a little trouble getting qualified, it'll allow for a little bit of higher threshold for what we can qualify you for. So you can generally qualify for more house if you are VA eligible. Number 9 is you have 60 days to occupy. So if you are buying a home, sight unseen, as we've seen a lot of times can happen with PCS with these military moves, you have 60 days to intend to occupy, and the spouse can count as that person occupying. So you've got some flexibility there. You don't have to be here already when you sign the papers. We can do a mail away, and we can have that home ready for them so that when they close, they can pull the moving truck right up to that house and start moving right in as soon as they move here. And number 10, it's primary residence only. So for a VA loan, you must live in this as your primary residence, and you must intend to occupy this home as your primary residence for at least 12 months. Now, after the 12 months have passed, you can flip it into a investment property and go buy a new primary residence. And a lot of folks, what they'll do is they'll live here, and when it's time to move to a new base, they'll turn it into a rental and rinse and repeat. And I've talked to literally many millionaires because they just did that exact strategy, kept on doing it, and fast forward over a 20-year career, they got a lot of these homes paid off, and now they're just collecting checks, baby. And bonus, the VA loan is eligible for 2 to 4 unit properties. So 2 to 4 unit properties on the VA loan, that means duplex, triplex, quadplex. Those can all be funded through a VA loan. And the cool part is we can use the additional units to help that airman qualify, or that soldier qualify. So if you're a young active duty service member, maybe not making a lot of money, it's a pretty cool opportunity for you to be able to buy a triplex, quadplex, because that income coming in from those extra units offsets your payment and makes it so much easier. So really, you've got an awesome, unique opportunity to be able to get multifamily real estate through that VA loan. So those are some of the benefits. I'm sure there's even more, but the VA loan, if you have access to it, use that thing, and make sure you empower your clients to use it. And if they have any of these myths, let's bust them together.